Thank you all for taking time out of your hectic schedules. Sorry, Mayor Bima Arya, one of our rising political stars. Um, you know, Bali is always a great place to come, as we've seen from the survey. And last night we got a bit of extra excitement. I don't know if at 2:30 in the morning you were woken up by a bit of a tremor, right? I was just trying to go to bed, so I was facing the choice between going to sleep or evacuating. Easy choice for me. I went right back to bed. So, and then this morning I was chatting with Mr. Jose Viñals, Senate Charter Chairman. Aside from the physical earthquake overnight, we also had a bit of a financial earthquake with the Nasdaq plummeting 4% and the the S&P 500 plummeting 3%. I think the Dow also. So I was asking the chairman, which one do you prefer, the tectonic earthquake or the financial earthquake? So you can have your choice. But I do think by coincidence, by luck, we're all meeting up this week here in Bali at a very fascinating time, right? Obviously, we are now seeing considerable turmoil in currency markets, especially emerging markets currencies. The trade war between the USA and China is now about 6 months old, and just got escalated to a new chapter. On the other hand, NAFTA was just concluded, right? It's remarkable. The finance minister of Turkey, President Erdogan's son-in-law, is in town. I understand, in fact, I think I read in Bloomberg that the finance minister of Pakistan and his team are in town for meetings with the IMF on a potential bailout package for Pakistan. So really a remarkable time for all of us to be meeting up here in Bali this week. I think I want to just get us going with a couple of things, right? It's kind of a cliche to say that we're meeting at a crucial juncture, right, or at a historic moment. But one thing that I will say is, I think, including based on my informal chats here and there with various policymakers, I think we're on the verge of pretty considerable tectonic shifts, right? No pun intended. In particular, I think with respect to the US dollar. So I think if you really trace back a lot of the turbulence in recent months, obviously emerging markets currencies are under pressure because of the rising exchange rate of the US dollar and the rising interest rates on the US dollar, right? And then US sanctions, like the biggest and most potent threat that Washington always has to threaten sanctions is the threat to cut off people from the dollar clearing system and the dollar financial sector, right? And it's quite remarkable to me that you have people as high up as German Chancellor Angela Merkel and French President Emmanuel Macron issuing statements saying, we need to get away from the dollar. We need to give a more prominent role to the euro. And even more shockingly, they even said, we need to build a parallel global payment system as an alternative to SWIFT, right? So again, the US dollar currently accounts for about 70% of global reserves. It accounts for maybe 90% of the daily turnover in the currency market are crosses against the US dollar, right? Obviously, the dollar is not going anywhere. It's not going away. Frankly, what probably global policymakers will aim to achieve is to maybe get the dollar down from 70% of reserves down to like 60 or 55. At 55 or 60, the dollar would still be very dominant, right? But what is a challenge today is not its dominance, but really its over-dominance, right? And it's causing significant problems from emerging markets currencies down to unilateral action from Washington. Now, the second thing that I would say is like this, taking it a bit closer to home. You know, with the pressure that emerging markets are under, all the eyes are now on Argentina, all the eyes are now on Turkey, all the eyes are now on India, Indonesia, right? You know, for me, times like this is always more interesting, frankly. You know, I first joined the cabinet almost exactly 3 years ago, first as trade minister, and that was the last time that our currency, the rupiah, was under this kind of pressure, right? That was the last time the rupiah was flirting with the 15,000 rupiah per US dollar level. And what was the result? The pressure that we were under caused the government to launch the biggest reform drive that we probably saw in 15 or 20 years, right? You know, in Indonesia, we have this old saying that I will never get tired of, which is that good times leads to bad policy, and bad times leads to good policy, right? And this probably is true not only for Indonesia, but for a lot of countries, right? If you look back to the European sovereign debt crisis, you know, Portugal, Ireland, Greece, they triggered massive structural reforms, right? Spain, in particular, reformed their labor markets. Ireland reformed their financial sector. And remarkably, only 3 years after these drastic reforms, those economies were booming again. So Ireland is booming, Spain is booming, Portugal is doing well, Greece just now exited their IMF bailout program. But the point is, unfortunately, a lot of times you need pressure. Hopefully, we don't go as far as crisis, but oftentimes, indeed, crisis does trigger reform. And sad to say, very few countries or very few societies in the world are able to do reform preventively or preemptively, right? So one upside that I see from the current market turmoil and the current market pressure is, I think this is going to trigger a fresh wave of reforms. And again, I'll save this for the interactive portion of this session. You know, I'll welcome any specific questions you may have, but certainly based on my internal discussions with President Jokowi, with other members of the cabinet, you know, we can already identify a number of reforms which, frankly, were previously completely not on the table. Now, with the market pressure and the currency pressure, are suddenly back on the table, right? So I think the crucial question on investors' mind is what next, right? How do we position ourselves for what's coming next in the markets? Personally, I think markets probably have stabilized for a while, right? And again, like if you look at 2015, it was not so long ago that there was doom and gloom, right? I remember I joined the cabinet August 2015. The currency pressures, you know, the shock devaluation of the renminbi was like November 2015. I came to Davos in January of 2016. Everybody was gloomy. Everybody was so gloomy, right? And as it turns out, that was actually the beginning of the recovery. So throughout 2016, 2017, and into 2018, that's when all the emerging market currencies rallied, all the central bank reserves replenished, right? But how did it happen? It happened because it forced countries like Indonesia, like China, like India at that time to embark on serious and concerted reforms, right? So, and that's what I predict is gonna be ahead for us in the next 3 to 6 months. So with that, maybe we'll move to the interactive portion.